Good morning and welcome to today's edition of the London Session Open. It's October 18, 2019, and it's 17 minutes past 7 a.m. in London when I'm recording this market update. Before we start, as always, I need to stress that trading financial markets unfortunately is high risk and we may lose all our invested money. And as you've probably seen on those different broker pages, between 70, well, about 70% of all traders lose money. Okay, so let's begin and talk a bit about the euro. So the dollar has been weakening quite a lot against many different currencies lately, and it's all about Brexit and people's expectations, what's going to happen. And as you know, the EU and UK have agreed to a deal. Now the challenge is for Prime Minister Johnson to convince his peers in Parliament to vote for it. And that's what's all about. And that vote is going to happen on a Saturday, unfortunately. So most likely, what's going to happen is come Sunday, if they're the UK side with the deal, maybe the pound will gain a bit more. But if it doesn't, the pound should probably weaken, and we can have similar effects on the euro dollar. So you need to be very, very careful with holding positions over the weekend. But let's talk about what's happening here right now. So the market is definitely very strong, and it's quite interesting. Reminds me, I don't know exactly when it was, but it reminds me about a few years ago. I think it must have been maybe when I was at university, so 2006, 2007, when the market, because the market will many times after a good little run, right? Remember we talked about being bullish from this area here, right? And the market went all the way up like that. So usually when you have a run like this, which is a run of about 90 pip, you'll have a bit of a correction. So that's why I usually just take a fib from the low to the high and sort of aim for about a 50% correction. That's usually a good strategy. But here, because of the news and I guess other stuff as well, the market did not correct. In fact, it corrected 21 pip and then just added another 46. And I remember back in the old days when markets would trend, you could buy the breakouts here, stop losses below, and just grab a few pip. It will be a 1-to-1 or so, but you can still trade that. Then after a few years, you couldn't do that, and up until now, where you start to see that you can do that again successfully. I wouldn't call it successfully because it just happened once that I can remember now that we sort of missed out on the pullback. So what's going on now then? Well, let's actually just clear everything out here. So this is the daily chart, and we moved quite a bit from the 2019 lows. And as you know, my system is a trend following system where we just follow a trend until we get told otherwise, so get stopped out. Now, I think in general that we will be going down here again eventually. When people forget about Brexit, um, then we might go down again because what happened as well was, as you know, the European economy with Germany have been suffering more than the US. And what's happening here is that the US economic data is been catching up with Germany. And last time I checked, the economic situation in Europe does not look like it's turned around. There's the Centix indicator that was released in the beginning of the month, and that again suggested lower economic activity. So I think eventually what's going to happen is that a lot of the bad data in the US will be priced in, and then suddenly people start to look at the EU again, and then obviously they did the QE, so they're not going to do any major changes to that in the EU anytime soon. But maybe down the line, maybe 3 months from now, something like that, maybe they'll expand things. So I think eventually we're going to go lower again. I don't really think we should be trading necessarily up here. Now, some interesting levels that my block price will be 111.64, followed by 112.47, which is this big level. So let's see how far this market is happy to trade. But I can tell you that at least in the short term, there's no doubt that the trend is bullish, right? So if we would take Fibonacci from this whole move, you get all these three levels, and we can figure something, we can see something quite quickly, and is that probably 110.18 is enough to have that as a stop level, because that would mean we need to trade all the way down to the fourth low. But not only that, this whole area here, which resistance, is going to act as support. This high as well was resistance, and then here acted as support. I'm also going to just do things like that. So I think the sweet spot, this is a tricky one. If the trend is going to continue to be very, very strong, then it's probably just going to bounce from here, the price. That would be the optimal level. If not, it's going to be slightly lower, and that's where I want to focus. I want to focus in that little range here. So that would be between 110.40 and 110.85 or so. And then maybe from here, turn bullish. Like that. Next market, GBP versus the USD. So this is GBP versus the USD, and the trend is bullish here as well, and is bullish above 127.22, which is here. And I think we can just leave this up like that. And it would have been amazing. Well, obviously it didn't. I wanted to go down a bit and then go upwards. That's what I was looking at, but it didn't do that. Looking at this today is a bit fragile. I think if you look at the daily chart, okay, it's not that bad actually. At one point yesterday, it looked like a reversal candle, but looking at it today, you see it didn't close as bad. What can I say about this then? Let's put this here. And then this is a tricky one. It's a tricky one because I know what's going to happen here, that the euphoria is going to end. Could end already today as people book profits, I think. But you can potentially, if we have a little test of the low from yesterday, so around 127.61, turn potentially bullish. But when this goes out here, if we trade below it, I think realistically at that point we'll have a steeper correction, probably down to something like 127.20, 124.20 or so. Dollar versus the Japanese yen. The idea is just to be bullish about 108.08, 108.02. There's no real change to the outlook there. And that's it really. We touched the buy zone yesterday, a bit of profit, and that's it. Crude oil, we talked about being bullish from 52.97. That survived. For now, I mean, because we created a nice little low here, it looks cool. I wouldn't trust this too much. Maybe we can book a bit of profit here. I think it might go down again, but eventually up to the midpoint. We now have two decent lows, so I will be bullish about 51.34, which we talked about before, but yesterday I said maybe you want to push this down a bit. Gold prices, what a boring market now. Reminds me a bit about the euro, the way it used to be. And we still continue to consolidate within these two levels, and I think as long as we're below 15.19, I think this market can probably go down like that and target something like 14.59. S&P 500. So I had so many scenarios here. What can I say about this? Well, I don't want to confuse you too much. Let's just leave it like this. So not much happened yesterday. The trend does remain bullish above this level, which is the 2952.6 level. And then you have support at 2880 down here. And I think it might go down and then up. And then you have, we're not going to cover the NASDAQ, but well, you can see here, pretty much looks like the S&P 500. German DAX. This one as well. This one I think did on the daily provide a typical reversal candle. See that? This is a take profit candle. I think it makes sense. In the past, it has been a situation exactly from October last year. Up to October last year, you had some decent trends, but from October, I mean, here you did have a nice little downtrend here, really. Well, actually, I'm not sure. I remember this though. In October last year, the market was here. September, actually. So you can see how this market was going straight up. Relatively easy to trade. Remember as well, oil, October. Very nice little uptrend. Traded this section here. And then, of course, the whole market collapsed. And it was a nice downtrend here. But the problem is, if you're trying to follow like I am, then you don't just switch from being bullish to bearish. You need to wait for the trend to reverse. So I'm not going to say there were definitely some trends. And then this was from the beginning of the year. Remember this one? We talked about this one. You might remember. This is bottom out here and head upwards. Now, I think here, not in crude, of course, but in the German DAX, the reason why I'm talking about all of this is that this would and is traditionally like a normal pattern breakout. And you can look at other markets as well, French stock market, Euro Stoxx 50. They all sort of try to break out, even the Italian stock market. And usually we have very nice and valid breakout signals. But this year, with the exception of here, we did have an inverse in our shoulder here in the beginning of the year. Remember that? We talked about that big head, left and right shoulder. But from here, really, you got to break to new all-time high. And then that did not work out. And then you had to break to the downside, which should have opened up for further losses. That did not work out. And now we're back at it again here for that breakout. So I'm very skeptical to this one. That's what I'm trying to say. Long story short, if you look at from a daily chart, and let's just clean all of this. This is your low on the daily. And you can take a fib from the low to the high. It gives you these different levels. So what can I say here? 1240 maybe? I'm not really sure here. On the 1 hour inverse, almost head left, maybe right shoulder. It looks to me like it's starting to roll over. Gonna be a bearish. The idea is straightforward below that candle, which is the reversal candle. Take that out, things turn bullish again. So I'm gonna do like that, and then I'm gonna put a fib on this. I'm gonna ignore the spike. So this is your fibs, and here's the first fib, which also happened to be where all these highs are. And then you put a fib on this like that, and then let's use a 30-minute chart. If the market swings up to this little high here, which is actually, let's put it on the first fib like that, in this little area, I think people will most likely try to sell. Risk reward ratio is 1.46, unless you would wait for a stronger correction. I'm not sure that's going to happen though, but if you take a fib, you can see that if we get a 50% correction or so, then you get your 2 times risk reward ratio. Okay, this finalizes today's market update. If you do have any questions, let me know, guys. Have a great day, and don't forget to subscribe to the ATFX YouTube channel, which is this one right here. So you get notifications because we're not doing these webinars live right now because they're clashing with production of articles and other projects I'm working on in the morning on investingcube.com, which is the site I manage. Uh, you can definitely check that out. We have a new guy joining us on Monday. So we're gonna have even more content in the beginning of the day, and you definitely want to join in. When you arrive here, it's very straightforward. You click on allow here as well. That allows us to send us pop-ups to you. We only send like maybe 3 a week, so it's not that much. Then we have all the different channels here as well. Twitter gives us all our content. We just started this, so all support is welcome. All sort of likes and retweets is nice. You got the news. You also have educational stuff. The educational stuff is actually here, articles, and then you have the videos, and then you have the webinars, which are run by a partner of us. So I do some of these. I think I'm supposed to do this one on October 22nd. But that's about it. Uh, all right, guys, thanks so much for watching, and I'll see you guys tomorrow. Sorry, not tomorrow, of course, on Monday. Tomorrow will be a Saturday. Have a great day, guys, and a happy weekend. Bye bye.